select committee's schedule ahead of this.
I think you're a bigger pull than Simon Bridges.
All right, shall we crack into it then, Rob?
Yeah. Hello, everyone, and welcome to Infometrics' second webinar, where we look into the effects of the COVID-19 on the New Zealand economy. Our first webinar had a real kind of regional focus. This one today will have much more of a sector focus. So I'm Rob Hayes, I'm a senior economist at Infometrics. I'll be curating all of your questions today, but I'm going to first hand over to Brad Olsen, one of our other senior economists, who's going to talk to you for about 30 minutes about all the information we've been pulling together about how COVID-19 is affecting sectors. And then we'll have about 30 minutes where we'll start answering your questions. So over to you, Brad.
Fantastic, thanks Rob, and kia ora everyone. Thanks so much for coming again. I see we've got a larger number of attendees at the moment than last time, which is totally not daunting at all. As Rob said, I'll sort of go on for about half an hour or so. Hopefully you won't get sort of sick of me by then, and then we'll take some of your questions. But I just wanted to do a little bit of housekeeping, if you will, and something I think that will assist probably a number of people on the call today, and that's just outlining where you will be able to find some of the resources we will eventually be sharing here. So if I take you quickly to our Infometrics portal here, this is obviously client only. Oh yeah, I am sharing, that's good. Client only, and what we're doing here is alongside our normal notes where we're putting them there, we've also got a section here for webinars. We're going to be updating this and probably moving it around at some stage, but at present we do have a place where we are putting copies of our webinars, and this one will be there later this afternoon as well. So if colleagues or others aren't able to make it, they will be able to watch this at the end. The other area I'll mention briefly is on our public-facing website, and that is our COVID-19 Insights and Response page. So sort of the first port of call for all of our information on this. So this is where we've been uploading some of our notes, particularly down here with some of our articles. You can click through onto all of these, and that's sort of our repository at the moment for where we're putting some of our headline bits and pieces. All right, what I'll do for you as well is just run you through a quick overview of what I'm going to cover off today, and then of course take those questions. I'll just have starting like I did last time, going through a little bit of the global picture that we know about. Having a look at some of the current data we've got in New Zealand that isolates what's happening. We got some useful data yesterday from Market View, which I'll show you through. It has some fascinating trends in terms of panic buying at supermarkets and where people are or aren't spending their money. I'll have a little bit of a look at our industry level effects on employment during the global financial crisis, just because it gives us a bit of a read on what sort of how sectors responded during that time and how that might evolve this time round. I'll also talk briefly about some of the drops we saw for Māori and young people. Now, I noted those two phenomena last time, but I wanted to show you some numbers today. And then I'll also go through a few of the sort of key sectors we're hearing about and we know some information about to understand what some of those industry and sector specific changes might be. All right, it's back to sharing my screen. There'll be a bit of back and forth today, but that's not unusual. So I just wanted to show you the latest numbers from Johns Hopkins, who is collating the latest and greatest on COVID-19 cases. You can see that we are very rapidly approaching 1 million cases, and that the focus of this has very much spread to the US. For sure, there are still issues in the likes of Europe, across the likes of Italy, Spain, and the UK, among others, particularly with some of their very high fatality numbers. But the US is very quickly emerging as a core area of focus for the global pandemic we're seeing emerging. There is great risk that if the US continues down the current path it has, it may well struggle to pull itself out as quickly as other nations. Interesting as well to point out the difference in government systems both here and abroad. Of course, both the US and Australia having state and federal systems, which has, in my personal opinion, hampered a little bit of the activity we've got going on in those areas. There are some states that are in lockdown, other states that aren't, and the lack of consistency makes it very, very hard to piece together not only the health picture, but also the economic recovery plan. In New Zealand, we are very much all in this together and experiencing that lockdown at the moment. All right, taking you quickly to some of the spending figures we got through from Market View, if I find my right file here. I just wanted to show you some of our headline figures that we got there from Market View, and there's a couple different ways to cut these numbers, and I'll show you some charts in a second. But just noting that in total over the last nearly 2 months of data that we've got from Market View, that's looking at the 9th of Feb through to the 26th of March. I'm just going to keep getting lots of chats coming through, just going to see if any of them are important for me to look at.
Just some issues around your the voice distorting, Brad, but it doesn't
Oh,
seem
right.
to be all that broad.
Okay, that may well be my internet. I have figured out, just for everyone's noting, that my flat, although it has fibre internet, apparently that fibre is not as great as other places. So I have had some internet issues, but I hope this maintains all right throughout. Anyway, back on these spending numbers, what we've got here is actually a bit of an increase in total spending coming through, and that is really coming through particularly from food, liquor and pharmacies. Now that's your panic buying in the lead up to the lockdown, and also an increase in home and recreational retailing. Now my suspicion there is that is everyone who tried to get ahead of the curve and set up their home office. For those of you who were on the call last week, you'll remember that I have not done that and am coming to you today from my humble ironing board desk, which is actually standing up really well considering. But anyway, when we then look at the total spending over the week up until the 26th of March, now the 26th for those who don't have their diaries in front of them, was the Thursday, the first day of lockdown. So over the 7 days up until the lockdown came in, we did see some very heavy falls in spending in total, although again we had some quite large boosts for food and as well as that for the home and recreational areas. You can see those two figures there. The first day of lockdown, we had a daily spend that was 77% lower overall, and the only real categories that stopped that was food and a bit of fuel that we were obviously still spending on, supermarkets, and that being one of the only places we can continue spending at the moment. Just to show you some of the graphs and how sort of all over the place they are. Obviously, this is the baseline for food. You can see that panic buying spike coming through quite strongly there. But for other areas like clothing, footwear, and department stores, obviously that trend in numbers going quite steeply down. All right, I'll just quickly show you as well some of the figures we've got from the global financial crisis. Now, this is probably going to be a little bit small on your screen, and that's fine. That's actually, I might stop sharing my. No, I'll keep sharing it for a minute, and I'll just go through some of the headlines numbers. Yes.
Can I just? Someone just asked a question about those spending numbers.
Does
it include online spending?
Yes, it's everything that went through the Paymark system. So there is certainly some online spending in it, but not a huge, not a huge amount from memory. I'm pretty sure that it does still include some of the online spend though. It depends on who that pay merchant is. So sort of yes, sort of no is the answer to that one. All right, so looking at the global financial crisis, look, it's the most recent global crisis we've faced as an economy, and the other important fact is it's one of the only periods where we have good detailed information about how different regions and, importantly for today, how sectors responded. So there's some, the reason I'm showing you this chart in this way at the moment is one, to show you the direction of some of the areas, but two, to show you some of the scales of how large or small some of these industries are. For example, we could focus on mining because it, continued to grow, but given how small of an industry it is, it's probably not useful for us to go into. So going through some of the major groupings of industries, if we look at manufacturing in general, and you can see that one is this part here, we can see it was already on a decline up until 2009, which is broadly 2009-10 is where we start seeing the employment effects of the GFC coming through. And you can see at that point there was a very, very sharp drop in manufacturing activity between 2009 and 2010. And it maintained on a downward spiral since then, but there was quite a high level shift. In opposition to that, something like health continued to grow, and in fact grew slightly faster once we got through into the GFC into 2010. And this is broadly in keeping for a lot of these. There's often a bit of a dip around 2010 and then some sort of recovery over time. Like I said, the exception there being manufacturing. The couple I do want to point out though for you, the first one is looking at some of our retail trade ones, and you can see them over there. And I will go into these in detail in a second. And in fact, I might pop there now. And if we look here at retail trade, make sure we don't have construction there. In terms of the decline there, we had quite a drop coming down to almost a 3% drop in employment over the year to March 2010. So again, a large decline there. But we did see it pick back up again, not hugely fast, don't get me wrong. It was a hard time in the retail space, but it did eventually pick up further. One of the other ones, though, and one of the more fascinating ones I did want to take you through briefly, is looking at construction employment. We know that construction employment has grown quite fast over the last 5 years or so, but those of you who may have seen the news this morning or last night will have viewed a release from Infrastructure New Zealand, which noted that up to 30% of the construction workforce could be lost over the next few weeks and months, which is a hugely concerning figure, and I'll get into some of those in a second. But right. Just noting, yes, Rob.
Jason asks, is this a percentage drop from baseline or the drop each year?
This is the drop each year. So this is an annual percentage change. So obviously the drop in 2010 is a drop on the number on 2009. So with slightly slowing growth and in fact a bit of a decline in 2009, you're already seeing those drops come through. So it's an annual percentage change. And for anyone that's interested, I'd be happy to email some of these headline figures out to people if you want to get in touch with us. And noting, I guess the important thing for construction is noting that their recovery was relatively swift, and in fact will need to be relatively swift as well as we turn to looking at the recovery in this pandemic. And I'll show you a couple other figures that I've got here as well. I'll show you firstly that Infrastructure New Zealand information, because that was quite fascinating but also quite damning. And you can see there that yellow line for actual contracting and construction, there's up to a 30% decline in essentially the labour force and hiring needs over the next 3 months. Again, hugely concerning for that area, particularly considering there's discussions this morning around a Ministry for Works coming back to the table for government. And I'll also just show you quickly ANZ's latest business outlook survey, which gives us a bit of a gauge on where businesses more generally are thinking. Now, I won't look at that business confidence figure for a second. That's pretty, it's a little bit political in a sense, but the actual activity outlook, which is firms' own activity, that's a much better measure. And you can see there's some pretty hard and fast declines across the board, but particularly for the likes of retail, which again is not unexpected. You can see as well that drop is quite steep. If I take you back up to their graph, which is a little bit easier to see, you can note that the light blue line there, one of the steepest drops on record, and in fact by just eyeballing that is worse than some of the drops during the global financial crisis. So some major issues coming through there when we think about the employment elements through all of this. What I'll do for you quickly as well, just because otherwise I'll forget because I'm pretty bad at my notes, is I'll just finally show you some of the numbers that we've got around Māori employment and that. We know that during downturns, there are certain groups that are more likely to see a decline in employment. You can see here, this is a graph of employment growth for Māori and non-Māori. And you can see for non-Māori in 2010, a nearly 2% decline in employment growth. But for Māori, a 6.3% decline. So it reinforces that not only do we know that Māori suffer, I guess, a much harder ride through economic downturns, but it also means when we look to recovery, we need to be much more prepared to assist those and provide additional education opportunities and employment-focused opportunities for Māori. Now, as well as that, I've also got some numbers here on youth unemployment, because we know that young people are also going to be let go straight away. Now, if we look at this dark blue line here, that's the total unemployment rate broadly, and this blue line rather up here is the unemployment rate for those aged 15 to 24. And you can see that not only is it generally much higher throughout the period, but that increase in the unemployment rate during downturns is much, much greater than the increase we see in the general unemployment rate. So just noting that particularly young people are going to suffer greatly through this, and we've already started hearing some reports coming through from employers that they are not going to go ahead, or certainly not to the same degree, with graduate programs or hiring the same sort of staff as they previously have. So some real issues coming through there. Now, I wanted to go through some of the sectors a little bit more, and this will be me just talking a bit more because we don't have any firm numbers on our expectations for these industries yet. We are working on those, but I wanted to give you a bit of a flavour of our thinking for some of them. So I'll go through them broadly in how we look at the economy. So the first one is the primary sector. We know at the moment they are an essential service and they continue to operate. Now, they were one of our greater areas of risk when the pandemic was confined to China. Of course, we saw a decline in exports quite quickly, and we were worried at that point over how we might be able to rescue our exports as we saw this COVID-19 virus ravage China, but left the world alone for the time being. That's obviously since reversed, where China is actually starting to pick up steam relatively quickly, all things considered, but other parts of the globe are certainly in strife. What is important, though, is that our foods exports are a key commodity that we're going to see go overseas. People still need to eat, and in fact, the US-NZ dollar has fallen by about 10%. That is going to support our food exports, particularly because we know that even though our food export prices are likely to decline somewhat, we've still got that sort of cushioning effect from the lower dollar. Now, the other point with the likes of the primary sector is that, broadly speaking, particularly when we're thinking about food, there's often a bit of a change in people's behaviour across the world when we see a health crisis or a health scare come through, and that will often see a bit of a boost in those who are seeking, healthier foods, or what they perceive to be healthier, and where there are quite strong food quality controls and similar. So again, New Zealand is well positioned there. Other parts of the sector, the primary sector in general, particularly the likes of forestry, will be in for a tougher time, particularly because what we've sort of got at the moment is the forestry sector was recovering last year after a huge buildup of logs on Chinese wharves. We have now seen that decline come through in terms of logging activity in New Zealand because China just hasn't needed as many logs. At the same time, you've had quite a large increase in log supply, which is further hampering any sort of recovery. So there was a large increase in European log stocks coming through, and we've actually recently seen a lot of rather cheap fire-damaged logs coming out of Australia post those wildfires, which is again diminishing some of the forestry elements at the moment. So they are an area of particular concern within the primary sector. When we look at manufacturing, we know that already manufacturing, generally speaking, was on a decline in New Zealand, that's sort of across the board. But we are aware, of course, that our food and beverage and packaging manufacturing areas are holding up pretty well at the moment, or certainly better than some other parts of the manufacturing sector. We expect these will continue to hold up broadly over time, although of course as greater automation comes through, we do expect that there is a general trend in the economy, particularly with this downturn, where firms will look to reduce their staff and possibly invest as we come into the recovery phase to keep their costs as low as possible. So a trend, I guess, to watch out for there. What we are sort of seeing with manufacturing across the country is that there is a bit of a switch in the short term towards some more sort of healthcare related manufacturing, but of course that's more of a short term than a long term issue. If we look at the likes of our public sector and as well as related associations and local government and similar, we do expect that will slightly increase. There's of course going to be additional stimulus needed from government, and we generally would expect government to expand its presence slightly, both in Wellington but also across the country, and we know they've already been focusing on some of those areas. Some of the service-based, particularly the professional services across the country, are in a very unique position at the moment. They are obviously, like us, still operating from home mostly, and we are expecting that post this pandemic, there's going to be a real change in how people operate. We may well see a bit of a decline in domestic business travel because we've all figured out how to use Zoom and other platforms, and there's a decision made over, is a meeting really essential, or can we do it via other means? But we are expecting that people's productivity at home will be lower over the next year or so. As Rob sort of alluded to, particularly at the start, sometimes it's hard to juggle that at home work rather, when you've got the likes of kids and such to look after. So just a slightly different dynamic to go through there. If we look at the likes of healthcare, again, we expect that area is ripe for additional stimulus, both from government, but also just generally as we see people's focus on health demand more action and more employment. Obviously takes a while to get some of these people through training, and I'll touch on training generally in a second, but we are expecting that the healthcare sector will have a little bit more power behind it in years to come. There will be an increased focus on trying to increase our level of access to healthcare across New Zealand, probably particularly in some of the regional parts of the country which aren't possibly as well resourced as at present. Tourism, possibly the one I should have started with, although I didn't want to start off with the most negative. Look, tourism is in a really, really tough place. At present, we're expecting job losses of sort of, between 30 and 40% for that sector, and that's really just our first cut, and probably was even before the lockdown emerged. So there are some significant challenges coming through for tourism. We know, for example, that over the last year, there was $17.2 billion of international tourist spending. That is obviously not going to come back. And our thinking at the moment is we may not see any sort of real international tourism activity for a minimum of a year, as we continue to have our borders contained until a vaccine arrives or similar. Although New Zealand may well get on top of COVID-19 a lot quicker than other nations, we're not going to open our borders if it could threaten our ability to control the disease. The other issues, of course, with the likes of tourism is that even at levels 2, 3, and 4 of the COVID alert system, non-essential travel was heavily discouraged and or banned. So there's again a very small area of domestic tourism that can continue at possibly level 1 and to a degree level 2, but broadly speaking, domestic tourism is also curtailed for the next wee while. Certainly at the moment, the lockdown is for a minimum, not a maximum, remember, of 4 weeks. And our thinking and my personal view is that it could well go on for, I think, at least 6 before we are revisiting what those lockdowns look like. Now, for the likes of tourism as well, we know that the international domain is going to look quite different. Some commentators are saying we could only have 40 major airlines left in the world. There is going to be a significant curtailing of Air New Zealand's international activities, and they have noted they will become primarily a domestic focused airline. So there will be some massive changes coming through there in terms of tourism. Now, it's also difficult at the moment for a lot of those operators, be it in accommodation or in food services, hospitality and such, or in fact in some of the activities where we don't have I guess, any real clue or any real ability to re-engage that sector in a timely manner. That is certainly the area we're expecting increased numbers of job losses to come through, and we expect also they may be some of the faster areas of job losses that come about. So tourism is quite a tough place at the moment. Right, one area that I wanted to touch on that we would have thought would have a little bit more strength, and this is why I wanted to spend a little bit of time on it, was the construction sector. And that's one that is, I guess, day by day growing a little bit more of an area of issue. As I noted before, Infrastructure New Zealand has outlined that there could be a 30% drop in job numbers over the next 3 months or so. And it very much aligns with what we have started to hear from some industry leaders and sources who are indicating that it's more a question of how many workers rather than if or even when this is going to happen, which is a concern because we know infrastructure particularly and construction more generally is going to be a core part of the recovery efforts for New Zealand. If we don't have the workforce though to undertake that activity, we are going to struggle in terms of thinking where we go to next and how we engage some of those projects. Now, we've heard this morning as well the government announcing an infrastructure group to come forward. Seems similar in a way to the Infrastructure Commission, but obviously a bit faster focused. And there's also, I guess, some musings around the potential for a Ministry of Works to be re-established or something similar to procure that sort of activity across the country. If I just go into some of the specifics of the construction sector, broadly speaking, we see the non-residential sector, so the more sort of commercial industrial activity being some of the fastest to fall away. Of course, we're not going to be building any hotels or other accommodation areas at the moment. And we're also likely to see limited activity for retail spots and cafes, bars and restaurants. All of that sort of activity will likely come away, particularly because not only have we lost tourism in terms of activity levels, but we've also seen over the last few years international investors funding a lot of some of our non-residential activity. And so we are expecting that to slow pretty much in line with our economic forecasts as well. When we look at residential, there's an interesting dynamic at play there. We have already been expecting that slower population growth, as well as what are historically high build rates, would see our residential construction activity peak later this year and then start to slide back down to a bit more of a normal level of activity. We are broadly expecting that to continue, but at a much sharper, swifter pace, with lower house prices reducing just how much additional housing is likely to get going. Now, some areas are probably going to be hit slightly harder than others. Auckland may well hold up better than otherwise because it does still have a bit of an undersupply to churn through there. One area, of course, we do think has greater risk is the likes of Queenstown, just because of how concentrated the tourism sector is there and the potential for more job losses, coupled with our estimates last year that Queenstown may be broadly pretty well supplied when it comes to housing, and so economic growth was the main driver of house prices rather than a supply-demand imbalance. Looking at infrastructure, of course, the one sort of saving grace, particularly for the construction sector, we have a $12 billion New Zealand upgrade program coming through. Important to note, though, that we're not expecting that sort of activity to come through until 2022. Not everything that people say is shovel-ready is actually shovel-ready. So it is something very much to bear in mind that even if we do have additional infrastructure projects brought online, there is still likely to be some sort of delay coming through with that. The other point and the final point I'll make on infrastructure is that there is, of course, additional scouting around by government at the moment, trying to understand what sort of infrastructure projects are available to be brought on stream as quickly as possible. And certainly my view would be that local government, when they are considering their annual and long-term plans, discuss with central government as quickly as possible what additional resources might be brought in from central government, including direct funding to allow some of these capital works programs to continue as they were planned, because they are going to be essential to maintaining our workforce and to recovering as a country. The two final bits of information I wanted to pass through. The first one was just looking a little bit at work from home, and we will be publishing something on this tomorrow. So if you can hold out for a little bit longer, we'll get this back to you. But these sort of figures here give you a little bit of an outline of what our expectations are around the industry perspective of working from home and those in essential services. So some are pretty broadly known, that some of our more office-based activity and those who are already using ICT quite well are going to be working from home already. Nearly 60% of some of the information, media and communications areas, alongside financial and some of our professional, scientific and technical services, public admin and what have you. Of course, something like accommodation and food services, you can't really do from home, alongside the likes of construction and retail trade and similar. Just to note that for some of these where we see construction, 15.7%, of course, it's not going to be the builders who are working from home, unless they're doing a bit of DIY, but it will be some of the others in related industries who are doing some of the support and planning for construction. Similar sorts of things happen when we add in essential services. Obviously, some of those who are classed as essential services are maxed out at 100%. We expect that they, broadly speaking, are all working in some way, shape or form, but some of the other sectors are a little bit lower down on the scales there. The one final bit of information I'll leave you with, just because it was an area of focus when I was doing some of my preparations last night for a media interview this morning, was just noting, of course, that it is April 1 today. No, I don't have any April Fool's jokes for you. I think we're all in enough of a dreamland at the moment. We don't need additional issues there, but noting, of course, that April 1 also means a minimum wage increase comes in today. And we have made it clear that that minimum wage increase is likely to exacerbate pressure on businesses. And so, in fact, it may well have been better for the government to reconsider its position. It hasn't done that, and that's its prerogative. It's made a decision and it's stuck to it. What we do know is that increased minimum wage payments do mean that those at lower incomes spend more, and we know that they also likely spend it more in New Zealand. And so noting that this also, though, has the implications on business that they may well let go of more workers, our sort of, or certainly my preference would rather that the government, if they were to continue with this minimum wage increase, which they've done, is to provide some sort of counter back to businesses through a lower business tax rate or similar, to offset that increased spending they'll need to do on employers, or rather on employees. The minimum wage, of course, could tip some companies over that brink, and at the moment the focus remains on trying to maintain employment. So there's definitely an area of focus there. Just see a note coming through from Phil up in Whangarei. So shout out to Phil for reminding me. Very good point around training. So generally speaking, in economic downturns like this, and we've seen that we're likely to have some rather steep falls, particularly in some sectors, we will have a bunch of people who are without jobs and who are essentially unable to get back into employment as quickly as possible. We will expect that there will be increased opportunities for the likes of education in different frames, education and training rather. So that'll include, everyone of course always says, oh, well, university. To be clear, university is possibly not the key area of focus when we look at education and training turning to the future. It's much more going to be sort of some of our polytechs and other education facilities around the country. They're going to provide much more sort of hands-on and forward-focused activity when we think about people trying to get their skill levels higher or retraining after losing their jobs. as well as the likes of apprenticeships and others where people are going to be looking to work and learn on the job while getting paid. And particularly for the construction sector, that's going to be a key area of focus as we turn towards that recovery phase. So education will be critical because we'll have a bunch of people with a certain set of skills that will not be able to be easily redeployed in other sectors. They will require some re-education, and I think it's going to be important that some of our groups across the country, be it employers as well as local government, economic development agencies, chambers of commerce, educators themselves, all come together to figure out what skills are needed to figure out how to best create a learning package in an area to support local industries and ensure that that transition out of work into education and back into a redeployed workforce is as seamless as possible. Right, I've rattled on for probably far too long there. Rob, I'll bring you back in if that's all right to bring in some questions.
Yeah, no problem. First of all, if I could ask participants to ask your questions through the Q&A function rather than through the chat function, it just makes it a lot easier to keep track of them. So thanks for that. So the first question goes right back to the map you showed us at the start with the number of cases. And Tessa asks, how much of an impact will the discrepancy in testing cause? So for example, the UK only testing those in hospital, for example. So I think that's around, are we in that map, are we seeing kind of the best case scenario where there's actually a lot of people who have the virus but have not been tested for it?
Yeah, no, absolutely. That's certainly the case, and trying to understand those testing regimes is going to be quite critical for understanding the spread of the disease. In fact, yesterday, even in New Zealand, there were calls, and I think a bit of acceptance from the government to increase our testing and widen it out. One of the issues we're seeing globally is a bit of a difference in who gets tested. So I think in New Zealand, the case definition meant that you had to be, you had to have some sort of connection to someone. Either you had to have travelled overseas, or you had to have a connection with someone who had had COVID or travelled overseas themselves before you could get tested, and that was certainly in the early days. And so understanding that testing regime is important. You're of course right that the UK has had, let's say, a few missteps in their activities going forward, and so yes, at this point, that map does represent those cases we know about. And there are very much expectations that there could be a lot more people out there who are either asymptomatic or who have it and are feeling a bit ill, but not ill enough to get sick. And of course, this is going to be an issue in New Zealand when we come towards our flu season, because it's going to be a lot harder to distinguish between who has the flu and who may have COVID, at least at the sort of point of incidence there.
All right, thanks, Brad. A question cropped up when you were showing us the Maori employment numbers during the GFC,
Yep.
and Teresa asks whether we have data for Pacifica as well.
Yes and no is the answer there. Not quite as good. We haven't modelled it to the same degree, but there is some data out there. And look, I don't have it to hand, but if Teresa gets in touch with us, I will make it my mission to dig it out and find it. Generally speaking, we do see Pacifica in terms of during economic downturns, from memory, follow the Māori unemployment and the loss of jobs. But I would have to go and look at the numbers to distinguish exactly how far that fall would be.
Okay, and again, in relation to the GFC, Andy asks, what was the reason that the New Zealand dollar, I think it was, oh, sorry, just New Zealand recovered so quickly from the GFC?
Yeah, I think it was essentially because we poured a huge amount of money into it. Part of it was also that it came at the same time or in a similar time frame, if you will, to the Christchurch earthquakes. Now, of course, that was a horrible tragedy, but in terms of our ability to recover, it really did cement a lot of our construction and infrastructure rebuilding, and all of those together allowed a bit more of a recovery coming through in those areas. We also, of course, saw the government generally spend a lot more money in those times to try and be counter-cyclical, to boost activity, and that's why I guess it's important to recognise as well, as we did in the last webinar, that the government does have a healthy balance sheet, as it did prior to the GFC, and it has spent, which is the time to do it. So broadly speaking, Rob, the reason there was because we reacted quite swiftly. Now, just to note quickly, because I know I mentioned last time a little bit around the Great Depression back in the 1930s. The reason that turned into a depression rather than just a normal recession, if you will, was because of the lack of activity from government, the lack of additional stimulus spending, and a much more hesitant reaction there. So that government spending is quite key, because at times like this, the private consumption, so households, we don't spend as much money. Businesses really ramp down their costs and ramp down their investment, and that really only leaves the government as the sort of the power shop for bringing the economy forward again.
Cool. There was some interest around the working from home data. Jade asks whether there's any data around the decrease in productivity that we might see from people working from home, and whether there's anything around how that differs across age groups.
Yeah, that's a great question. Nothing that I've seen, but I will go and have a bit of a look, because it's been an area of a few questions, even just internally over the last few days. I mean, certainly, as I noted, there's an element of, one, people might not have the same equipment that they've previously had, and may also have greater distractions. I know that a lot of people are becoming home bakers across the country, so there's possibly greater distractions as well than we've previously seen. One of the things that we have noted when we've sort of been discussing some of the changes around working from home is people, of course, who it's a lot harder to switch off, because your home, which is normally your non-work area, is now very much inextricably linked to your work activities. So important probably to make sure there is a clear structure there. Work starts at 9 and it finishes at 5, sort of thing, and so being a bit more strict on that. In terms of age groups, I suspect that young people broadly are more likely to adjust quicker. We already use digital activities more so than other age groups, so I suspect there could be an increase or a quicker transition. At the same time, we're possibly more likely to be distracted normally, so where that nets out, I'm not sure.
Okay, thanks, Brad. And Benji wanted to know how we calculated those working from home industry proportions.
Yep, so we had a little bit of a look at some data that Statistics New Zealand put out from some of their surveys over previous years, and essentially that asked whether or not there was provision for a business to work from home or not, and where there was, we sort of chunked that up on an industry level as well as at a regional level. So that's sort of how we got to it. So that was a sample of businesses from around the country who told Stats whether or not they could work from home. And that data is recent, in the last 18 months. So it does give us a good read on that as well. Just in terms of headline numbers that we saw, so by our estimates, around 29% of the workforce can work from home at present. As a point of comparison, back in 2006-7, roughly, by our estimates, it was around about 20-odd%. So a slight increase over time.
Cool. And another question that came in about the working from home. For the primary sector, Blair thinks that's the 13% is quite low, given that most farmers are working at home already.
Sure, I think you'll find that you're right, and I've had a few questions about that one. My understanding is that working from home would mean that you're inside the house, and if you're a farmer and have to go outside to move stock around or milk, I don't think that's considered working from home in the normal way we consider it. Working from home is probably a lot more what the likes of Rob and I are doing, which is within our four walls on a computer and such. But so yes, there's a few sort of definitional elements outside of that, but you're right that agri's a slightly harder one. Of course, if you do have quite a large sprawling farm or a few paddocks here and there, of course you might be working at home for part of them, but if you have to leave and move them out, it probably doesn't meet the definition. But look, we're getting into semantics there.
Yeah, another follow-up question on working from home. Anything about the kind of the urban rural divide with regard to access to internet, I guess, and also impact on productivity?
Yep. So noting some of the numbers that we brought out last week around the regional stuff, certainly the urban areas have a much higher proportion of working from home workers, and I think that also would integrate quite well with internet access and similar just general access of working from home. One of the things we have heard a lot, and we have seen the telcos move on, is of course data caps. For some rural or people in more rural areas, they may have a certain data cap that they aren't able to go past, and so that is likely to be a little bit of a hindrance. We have seen the telcos be as responsive as I think they can be at this point in time. They may well need to go further as we progress, but they have made some allowances there. The other point I'd make on that is that although data caps are one thing, just a general sort of amount of bandwidth is the other. So you might be like, for example, my flat where we have unlimited, but if everyone's streaming Netflix all at once, you may get a much slower connection. And we are seeing some quite large increases in internet traffic across New Zealand, which has seen some people experience some of those lows. So there is also a productivity element from that coming through, and that will lower productivity a touch.
Thanks, Brad. Moving on to a different topic, how does COVID-19 affect international migration, and what are the impacts on the labour market?
Yeah, some really good questions there, and some that I'd had a discussion with our broader forecasting team about yesterday. Look, we're expecting net migration to fall to zero and remain there for quite a while. Like I mentioned earlier, we're not expecting to see our borders open at any point soon, and even when they do, I think there'll be a much lower level of international activity, at least for sort of the next 6 months to a year, after borders are generally lifted around the world. I think once we do see net migration start to come back in, it will sort of slowly rise, and we could expect it to rise probably over the next, by the end of sort of 7-8 years from now, back to sort of that middle ground of around 25,000 per annum. But we are expecting it to be quite a slow start. And one of the other areas to note is we're expecting that one of the reasons we'll have a slow but still steady, I guess, increase in net migration eventually, and I'm talking probably more in 2 years' time at this point, is that we'll have more people coming in from overseas, and we'll have a much lower number of Kiwis who are leaving. People are going to want to stick around a bit more. Now, what does that mean for the labour market? It creates some really big issues there for how those industries where we previously used migrant workers who came in and did the job and did it really well. But of course, they are no longer able to come in to the same degree as previously. Now, at the same time, everyone instantly reacts and says, "Well, that's fine. We have, a huge amount of unemployed people who are available to do the work." But of course, there's a reason that they didn't do the work in the first place, and part of that is because possibly they didn't want to at the time. Whereas now they're going to, I suspect, it'll be a much more attractive option to have a job in those sectors. And as well as that, they might not have the training, which comes back to the sort of last point that I made in the main session, which was outlining that we will need to have an increase in that education and training element, particularly for some of our key industries where we have relied on sort of those who are coming in on work visas. And as I mentioned before, Rob, it's going to be quite critical to integrate that planning when we come to it for understanding what skills we need. What sort of areas did we bring in overseas labour to assist in in what industries, and what are we going to do to actually ensure that our Kiwis who might be out of work are able to get into their industry. And like I say, linking up those regional skills leadership groups and similar is going to be critical. And as I noted last week, and again, we haven't finalised our numbers on this, but we are continuing to work on assessing the much more local impacts of COVID-19 on employment to start to inform a little bit of that work as we go forward there.
Thanks, Brad. Another question was, do you see the outlook for international education being as grim as international tourism?
Probably not, and certainly one of the areas we could see a little bit more of a recovery faster in is some of that international education market. Of course, it is going to be a very different market generally. We're expecting a broader, global softening in travel activity and people wanting to stick a bit closer to home in general. But there is certainly more scope for that than tourism because there are already well-established linkages, I think, with a lot of these educational institutions and governments around the world. And I know that particularly the university sector, and this is only because I was in it up until 2 years ago, is still operating to try and access that market as quickly as possible once we come out of this pandemic. As I said as well, we are expecting that people will want to come back to New Zealand a bit more after this once we get through some of the travel restrictions. So there's I guess, like you said, Rob, more potential there for education than possibly tourism more generally.
Yeah. There's a question about the New Zealand Stock Exchange, particularly where do you see capital flows, any changes in capital flows as a result of COVID-19 between different sectors within New Zealand, but also perhaps flows between New Zealand and other countries?
Yep, an interesting question. I must say the financial markets generally aren't my area of focus, so I'll limit it to what I think I can talk about and won't touch on those other areas. I suspect one of the issues we might face is that we will have, I guess, a bit of a lower appetite generally across sort of smaller investors to get as far into the financial markets as they've previously done. Now, after the 1987 market crash, you did see quite a strong aversion to markets and stocks from sort of everyday investors. They got burnt hard and they didn't want to invest their money as much, which alongside some of our settings in New Zealand is why Kiwis, generally speaking, park their money in property rather than stocks, which is different from a lot of overseas areas. I'd expect that sort of thing to continue to a point. A lot of discussions that we're having with people continue to come back to KiwiSaver at some way, at some point in the conversation. People are worried that they've, lost money, if you will, and are a little bit more fearful of where their sort of capital is flowing into. So a little bit on that investor side, I suspect there might be a little bit more reluctance in that activity.
Yeah.
In general, though, I would see that some of the areas, particularly some of the infrastructure-backed organisations, as we get to the recovery phase, could well have an additional, capital raise or additional money going into those areas. Of course, those in tourism and aviation-related fields are going to not have the greatest experience in terms of having additional support coming through for the next wee while, but the likes of infrastructure and quite possibly the likes of telecommunications as well may stand up better, as well as utilities, which are generally seen as a slightly safer asset during downturns. Obviously lower payoff, but a bit more consistency there.
Yeah. Just turning now to some of the government responses, do you think the government is likely to offer cash support for businesses as they are in Australia? The wage subsidy scheme is great for employees, but really the only support for businesses is to get into more debt at the moment.
Yeah, it's an interesting one, and I suspect it will require a much more coordinated effort from businesses to make it clear sort of exactly what they want. And I'm not saying that businesses haven't done that already, but the government's been very clear it wants to save as much employment as possible. And look, that's a very, very important part of it. But of course, the wage subsidy is only part of that. If you're having to still pay your overheads and similar with no revenue and possibly no real potential for additional revenue coming down the line over the next few months, it does make it a very hard business decision to go, well, I'll continue to pay my workers even though I'm shelling out my own money to cover that with no revenue. So it could well be that the government comes up to the party with a bit more direct funding there. I expect, and actually I think I heard that the government is considering it. Exactly how that plays out, I'm not sure, but I would think that there probably needs to be additional support. At the moment, we're already with government support looking at an unemployment rate of nigh on 10%. Of course, if we see additional closures or layoffs from businesses, that could go higher. And in my mind, the risk of that has increased slightly over the last few days since we've heard about additional issues with construction sector industry leaders in that sort of area who are looking to lay off staff a lot quicker and are possibly looking to go under. So yes, more support for businesses is important, particularly like that person noted, Rob, where it's not just additional loan and debt support.
Yeah, and there's a few questions coming which I think are touching on the need for economic reforms. Once we kind of get through the worst of it, do you have any thoughts around whether we should be, for example, considering our economic structure and whether we're, for example, too reliant on trade with China, for example? So is the things that we're learning with the impact of COVID-19, does that tell us anything about our economic structure and whether it should change, and whether the government can do anything about that in some kind of an economic reform package?
Yeah, look, I think there's definitely some nudging that the government can look to do. In terms of where the economy lands out at the end of this, there will be some structural reforms just simply because there will have to be. Tourism, I don't think will ever be the same as it's previously been. It's such a huge knock, and it will take so long to recover that I think the tourism sector will be fundamentally different as we turn into the recovery phase. I think there is an opportunity here to rethink how we formally structure everything. We know, for example, that we've already been going down a bit more of a trying to balance both economic, social, and environmental responsibility, sort of across the corporate and economic world generally. And I think there could well be opportunities here that are unlocked for some areas. And I think particularly of the likes of Taranaki with some of their sort of the conversion they're working through at the moment away to more of a carbon neutral future. And I suspect that will be supported by government funding, and is certainly a way that's generally where we're moving to already. So this might speed up and exacerbate those changes. Important as well, though, to recognise some of those industries that do keep us supported. The likes of the primary sector is going to be a key one to get through this. So it's important when we do think about re-engineering the economy that we don't sort of rip up the blueprints, but we I guess move and modify what we've got rather than throwing it out and trying to start again. That's going to be quite important. In terms of our trade relationships, I think it does isolate a few areas of focus for us, but also trying to understand how we continue to diversify our markets. If anything, actually, our markets are probably more diversified now than in previous times. Yes, we have a reliance on China, but in previous times we've had reliances on other nations as well. And I think trying to understand how we better cooperate on that global stage with the likes of India and increasingly probably Africa is going to be sort of the next trade bastion to try and get into.
Yeah, and there's a few questions around our economic recovery. For example, what impact do you see on labour productivity, and any lag in returning to previous, albeit dismal levels? And do you see a surge in economic activity at some point, or will the ramping up be more incremental?
Yeah, it's an interesting question, and it goes back probably, Rob, to what I noted last week with what sort of recovery we see. Is it V, U, or sort of L shaped recovery? And the thinking, our sort of thinking at the moment is it won't be quite as strong as other crises that we've faced. So we're not going to see a massive decline down, but then a similar jump up. It will be a slightly slower recovery. I'm not going to say incremental. I think that sounds a little bit slow in my mind, but it's not going to be sort of a rapid bounce back, if you will. It is going to take a little bit of time. And on our estimates, we're going to see the effects of COVID-19 take our economic growth lower for the next 18 months or so. And we won't return to what we had pre-COVID until sort of about 3 years on from now. So that recovery time frame is a little bit longer. And of course, it will be shaped by what and how government decides to respond. We know they're going to be taking on debt for this. So the other thing, of course, to keep in mind over probably the more medium to long term is how do we make sure we pay down those debt levels so we have this additional capacity if we were to strike an additional crisis down the line.
Yeah, okay. And do you have any idea about infrastructure or building projects that may not proceed as a result of COVID-19, taking into account the government's focus on investing in some of these projects?
Yeah. So like I said, in terms of if we look at some of the areas that we're not likely to see as much spending in, the likes of those sort of accommodation based or retail and hospitality based activities, we wouldn't think would go ahead to the same degree. Um, the interesting areas, I guess, are that the government's already sought out a lot of roading and rail projects. So they have those ones broadly pretty well covered. What we are expecting is that there could well be additional spending on the likes of water assets, the three waters across local government, and also understanding possibly some of our port facilities, depending on how those port discussions shape up. In terms of some of the other major areas of I guess, assets that we look at, some of the expansions we expected for airports will not be going ahead. Auckland Airport's made it quite clear they won't be proceeding with their second runway anytime soon. And there's other areas as well that I suspect will see slightly softer activity. Telecommunications, I expect, will continue to hold up, not too badly, and it may well be that we start to refocus a bit more on what we can do in New Zealand. So I wouldn't be surprised if we saw additional capacity for the likes of waste services and recycling assets in New Zealand itself, rather than shipping from overseas, as just one example of sort of doing stuff a bit more local. But I think there is sort of an element of also trying to catch up for the underbuilding that we've done over previous years, as well as sort of building for the future. Because although we are going to have a bit of a dip in terms of activity, the long run focus is still on, continued strong growth, particularly sort of for some of our regional areas.
Yeah. I'm just going back to some of the topics you covered earlier, one about immigration and the labour market. Is there any data on which industries rely more on immigrants than others?
Yes and no. Funnily enough, I tried to do a little bit of analysis on some of those, and so we have got a bit more of a clue. We're still working through some of those numbers. So the answer is sort of yes and no. Nothing I can share at the moment, but we also know there are, I guess, some key areas, particularly in the primary sector, that rely on labour, particularly, kiwi fruit and fruit picking is a good example that we hear of often in the news. Not at the moment. I don't have any clear examples. And actually, Rob, you work in the space a little bit more than I. Do you have any feelings on those ones in terms of our information?
Yeah, I think what I'm hoping to get in the next few weeks is a sense of that from census data. Yeah, that's probably the first place I'm going to go to. I've been monitoring data from Immigration New Zealand on the number of people coming in to New Zealand on work visas, and some of those people for like essential skills visas and skilled migrant residents, they often record the occupation that they're going to be working in. So there is data knocking around, and I'm trying to pull it together at the moment. But as Brad says, we've got nothing that we can share with you just yet.
But we are working on it, and that's probably, unfortunately, one of the key takeaways at the moment is we still don't have the entire picture, but we are working on it. And I guess for those people who are still on the call there, come to us with your sort of ideas and suggestions and areas of focus, because that will help us understand what we need to be working on next.
Yeah. In terms of our modelling of the recovery, have we considered maybe the need, I think you mentioned this earlier, the need to extend the lockdown, or perhaps have the lockdown coming in waves, as they've suggested in the UK?
Yeah, so yes and no is again the answer to that one. We have had a little bit of a little bit of a think around how that might look. At the moment, we want to model, and this is a little bit of a tension in economists. We want to model what we currently know to be the case, rather than trying to put, I guess, scenarios around how the health response should evolve. Just because if we do that, we're effectively saying we think this is the best response. Where in fact we're economists, not health experts, so we sort of try to stick away from that. In saying that, what we have started to think about is what is likely to come through the pipeline, and certainly what are some of our other other forecasting colleagues across New Zealand thinking about when it comes to those further lockdowns, and or how can we adjust our forecast if those lockdowns come about. So we're trying to take them into account as much as possible, and if anything, we're putting a bit more of a probability on them. So we might not be saying we expect 4 weeks of lockdown and then 2 months of level 3 and then another 4 weeks of lockdown, sort of in that level of detail. We might more be saying, look, we're expecting 4 weeks of lockdown, and then there's a 30% chance that we have a much longer spread of lockdowns throughout the year, sort of thing. So we are considering it, and certainly as our thinking and information from government evolves, so does our forecasting.
Yeah, and probably another quite specific question about migration is those returning Kiwis. Any thoughts about how COVID-19 might affect those trends over the next few years?
Yeah, I mean, we saw a huge amount of people rush back to New Zealand, or try to rush back to New Zealand through the first sort of couple, or the last couple of weeks of all of this emerging. I think there could well be a little bit more want to return to New Zealand, probably particularly depending on how other nations fare with not only the health impacts but also the economic impacts of COVID-19. If New Zealand starts to fire ahead a bit faster and our economy starts to recover better, it could well be that more Kiwis consider returning home because the prospects are better. That's generally one of the key drivers of New Zealanders leaving the country or not, is how well our economy is performing relative to some of our major trading partners where Kiwis go. So I suspect that that's probably the main focus I would be watching for as we consider what happens to Kiwi migrants.
Yeah. Moving on to consumption patterns, we've talked about changes in working behaviour, so less flying, more teleconferencing. Any other thoughts on changes in consumption patterns that this pandemic might bring about?
Yeah, definitely. And I think we might wrap it up in a second as well, Rob. So we might take one more question after this one if you can find a goodie.
Yeah.
When we think of consumption generally, our expectation is that discretionary spending will fall considerably. So anything that you sort of isn't a bit more of an essential item, you're going to lower your spending on. So we might not have as much spending going forward on electronics, certainly not as much spending on some of our recreational activities. Food, rent, power, internet, those sort of things people will continue to spend on. But how much money they have left over for going to the movies or going out to grab a bite to eat with friends and a glass of wine and those sorts of things, we are expecting that more. I guess the wants rather than the needs being curtailed a lot more over the next year or so. So generally speaking, that's where our thinking around consumption's at present.
Yeah, thanks, Brad. We've got a handful of questions that we haven't answered yet. We'll answer them. We'll type some answers out to you after the webinar is finished. But I think our last one, quite an interesting one. Bridget has heard that Stats NZ is not deemed an essential service. Is this concerning?
I mean, look, it's always concerning because we love to get all of their fantastic data. I mean, they're part of the government, so I would have expected at least part of them would be. Certainly the communications that I've personally had with Stats NZ over the last week or so does note that they're working from home, and they have had that ability in place pretty well, particularly after both the Christchurch and the Kaikoura earthquakes. So their ability to work remotely is probably vastly better than it was in previous years. And from what we understand, they are obviously not doing some of their face-to-face interviewing, but a lot of their other surveys and data collection continues to go on. So I would hope they're still coming through. Look, we'll continue to monitor and assess. I would hope that if Stats wasn't able to come out with some of the information, it would make everyone, including us, aware of it as early as possible. But as of yet, they haven't done that. In fact, they've told us that everything looks broadly in line with their expectations. I'd note as well, just sort of looking at the data picture generally, MB has delayed by a week going forward their tourism spending activity. So taking a little bit more time with market view to get those numbers correct, which is fine. But we are sort of monitoring some of our other data sets. One of the ones I'll be focusing on in 2 weeks' time will be the food price index, just trying to understand what is going on in our supermarkets and how much we're paying for food and if that's fair or not. So possibly an awkward place to end it, Rob, but probably a good place there. Look, thanks everyone so much. I see we've had a few people dwindle down. That's fine. We've gone almost 10 minutes over our sort of roughly hour-long slot. Thanks so much for coming. It's been useful. We will be doing another one of these likely next week. We'll make people aware of that, particularly once we figure out what we're going to be discussing a bit more. But as always, feel free to get in touch with us with your questions so that we can provide a bit more insight to you. And look, our phones are always on as well, so do give us a bell. Anything further from you, Rob?
No, just a big thank you for all those really interesting questions. And yeah, thanks for your attention. Watch this space. We'll be here again.
Brilliant. Awesome. Thanks, everyone. And have a wonderful rest of the day in lockdown.